Welcome to today's webinar program, The Hidden Economics of Business Content, a presentation by Union Bank, brought to you by the Controller Network and sponsored by IBM. A few housekeeping notes before we get started. If you have technical questions, please use the chat box and we'll respond right away. If you have issues with audio sound, click on the phone icon that you'll see above the chat window to receive the teleconference information. Quality, everyone's lines have been muted. Sent to registered attendees prior to the webinar. As you'll see in the chat box on the right-hand side of your screen, I've also displayed the link there for you. If you can log on again using the instructions provided in your initial confirmation email. If you continue to experience difficulty, please email webinars@iosm.com. We ask questions throughout the presentation. Questions into the chat box and hit send to submit them. If we're not able to get to all the questions, we will respond post-webinar via email. This is recorded and you will receive a thank you email with the on-demand materials within 2 business days. The moderator for today is Mark Brusso, and our hosts for today are David Jeunesse and Stuart Bruce. Executive, writer, and public speaker who specializes in communicating the benefits of new technologies to business decision makers. Prior to IBM's acquisition of DataCap in 2010, Mr. Jeunesse managed DataCap's marketing communications initiative, including keynote speeches, webcasts, videos, blog posts, case studies, and a variety of published articles. Mr. is also a playwright with several New York productions to his credit and a published author. America on Display profiled America's most unusual museums and collections. For 17 years, Stuart Bruce has been helping banking and financial institutions implement document management and workflow solutions that focus on predictable and measurable ROI and client value. In his role at Pyramid Solutions, he is responsible for leveraging the IBM technologies to enable Pyramid's banking clients to rapidly implement their high-value solutions, reduce total cost of ownership. At this time, I'd like to hand things off to Mark.
Thank you, Shelley, and thank you all for joining us this afternoon. Let's start with a poll question, which is about to be displayed on your screen. This is an easy one. What industry is your organization's primary industry? Is it manufacturing, care, banking, insurance, education, something else? Take a moment to respond to the poll question displayed on your screen, and we'll discuss the results in just a moment. So the topic for today's webinar is business content. Information, you might say. And many people say information is the lifeblood of an organization. And no matter how you respond to this poll question on the screen, chances are your organization is probably struggling to manage its content, its information. Think about it. The volume of documents and unstructured data is greater than a third every year, according to your favorite analyst firm. And I assume you have a favorite analyst firm. In fact, one financial institution I know is taking delivery of a pallet, that's a pallet of servers, every other month just to support its growth of data. IDC estimates that digital content is growing by a factor of 44 between now and 2020. That's right, 44. Making all of this information is critical to companies, but that's easier said than done. And this is where you come in. What does this all have to do with senior finance execs, with controllers? Well, if you're a controller, you're focused on the 3 C's: cash, costs, and compliance. And out-of-control business content makes it extremely difficult for you to manage cash, costs, and compliance. Think about it. Nearly 60% of businesses say they have trouble finding documents. 50% of businesses documents make it difficult for them to respond to both internal and external customers. In fact, Cooper Lybrand estimates that employees spend anywhere between 20 and 40% of all of their time manually searching for documents. AIM says 15% of all documents get lost. And so this is the challenge that today's webinar is going to help you solve. Let's take a look at how you all responded to our poll question. Well, it looks like about half of you are other than the industries that we described. 11% of you come from the banking space, 9% are in healthcare, another 9% in manufacturing, 11% are in education, and 5% of you are in retail. Between now and the end of the webinar, I want you to use the chat tool on your screen and send us a note about the biggest business content challenge you're having in your organization today. I want to hand it off to David, who's going to tell us what is business content and the challenges organizations are facing that he's speaking with. David?
Well, thank you, Mark, and I like that. The 3 C's, very easy to remember. I'm going to assume that not everyone on this call is familiar with enterprise content management, sometimes called ECM, and I want to tell you something extremely important that's happening in the recent times here. Business content is becoming increasingly invisible and increasingly everywhere. That sounds like a weird contradiction, but most are very, very familiar with a type of business content that we call accounts payable. We know we go into the AP department and we see the invoices and the POs and the remittances and the expense reports, and we say, there, I can see that is a content-related process, and I see it everywhere. And if you stay in the back office and you go down a little bit, you'll be able to see that there's also human resources content, and that's all the resumes and the beneficiary documentation and the pension funds and the onboarding of employees and the training certifications. And so there's a collection of content. It continues as you go laterally around the organization into something that I'll call internal business content, which is really the conversation that you have inside your organization. And this applies to any of the industries today, even those others, which probably could be telecom, they could be transportation. All of them have internal business content. Sometimes it's called the tribal knowledge, the information about your customers, about your products and services, and about your markets. And notice, too, that it's not all documents now. We're talking a lot more about video. We're talking a lot more about audio and meeting minutes and PowerPoints and spreadsheets and lots of types of content. Think about customer-facing content. And this is another category. This is the story that you tell to the market, to your customer base. And not just documents here. We're seeing a lot of web copy. We're seeing videos. We're seeing a lot of different types of content that broaden the definition of content. And there's traditional stuff back and forth, the statements or the rebates and the coupons and the correspondence that go back and forth between customers and vendors and organizations. So this is another category. Now let's talk about legal content. So all of the contracts and all of the leases and the intellectual property, the funds, and maybe even the litigation and all of the documents going on in there as well. So this is a category of content that we have to factor in. And lately, we've begun to see a lot more social content. And of course, it's the blogs, Twitter, Facebook, and all different types of varieties. You're talking to you, about you, and perhaps you are interacting and talking back again. And again, this requires a way to look at and a way to understand. And the industry you're in, we see we have a nice mix here with us. If you're here, you know about HIPAA and all of the releases and the documents around that and the regulations on that. And medical records are huge, and testing and all of the that go along with it. Insurance, of course, there's policies and underwriting documents, and in banks there's loan documents and new opening, and in government, lots of content around permits and licensing and taxes and services and human services of all kinds. Now we get a sense that, wow, business content or what Mark called unstructured data, and structured because it's in all these different formats. It's not a spreadsheet where you can easily sort and do stuff. So it becomes a huge problem or maybe even an opportunity. We at IBM like to think about content as the new oil and be able to extract it and extract data from it and put it to work. And so with that in mind, entry points, find pillars or categories or best practices that you can content. So capture, protect, activate, analyze, and engage are these ways to think about it. And many of our customers are doing 5, or maybe they're doing a couple better than others. But these are ways to kind of take a look at content and understand it. I wanted to go through them very quickly to give you a sense of where we are in the world of content these days and how we evaluate their benefit, their hidden economic value to the organization before we get to Union Bank and understand how they've applied them. So, you see what we're saying, that if you can put this content to work, you will have smarter people in your organization who will know about your customers, your markets, your products, and ultimately will deliver improved business outcomes, and that's what we're going to look at today. So just define terms real quickly. About capture, we convert paper or electronic documents into a standard format so that we can work with them. You can't do analytics on a piece of paper, right? It has to be in a form you can work with. We're talking about extraction of data, manual typing. If you're typing for a living or people in your organization are typing data, then something's not right, because there are solutions there that can automate that. And the moving paper and documents from one place to another to do something with them, that also can be, and that is also a huge hidden cost. And I have a really good example that will be quite pertinent when we are in Union Bank. Here, you all know about accounts payable capture, I'm pretty sure, because that has gotten a lot of press, and you understand it really well. But let's think about a bank that is got a number of branches. So here we have 3 customers. They go down to a branch and they want to take out a loan, and so they fill out the application, and the branch loan officer makes a copy. If it's a mortgage, it could be 200, 300 documents. The loan officer says, I might need this later on in the process. Maybe I'll make a copy for myself. So some costs associated with copying and ink and managing printers and so forth. He puts a copy, or she puts a copy into a colored bag, and banks have this system where a green bag for HR and the red bag for checks and the yellow bag for loan documents. So the service comes by one day, they pick up all the bags, they take them where they're supposed to go. Many have told us about a $40 cost per branch per day, and then into the loan operations center. At 7 o'clock, you can kind of see the various people and the processes that goes through a loan. So first of all, do we have all the documents we need? We can't start the process. Oh, we're missing W-2. Let's get the customer on the line and get a copy, or get the loan officer on the line and get another document. Get the data off the documents into our loan origination system. So maybe manual data entry. We also check, is this a real person? Are they giving us real information that we can, judge and approve based on? And of course, there's a whole series of approvals, credit ratings, appraisals. All have to look at, and of course, exceptions always come up. So you can see this process has a lot of people in it, and it has a lot of components that cost today. So a lot of banks tell us with this old-fashioned approach, they can do about 0.2 loans per full-time employee per day. So let's see what you can do. The customer still goes down to the branch, still fills out the stuff, but the loan officer now does something different. The loan officer scans it on the MFP Biz Hub, and immediately all those images are encrypted. The data is sent off to the loan processing center. No more here. You don't need the person reviewing, do we have all the documents, because software can do that. It can go through a checklist. Do we have everything? Oh, we're missing a W-2, send an email. We don't need people typing data, because optical character recognition can automate data entry and identify what documents are. We don't need a fraud specialist looking at every every single one, maybe the more difficult ones, because our analytics can go through and check for fraudulent, for patterns, or for red flags that we've already set it up with. Yes, we still have approvers. Yes, we still have exceptions. But look, we're 1.2 loans per day, 100% improvement, and we've taken out the couriers, $10,000 per branch. So we can see right away that a real cost savings benefit from capture. And that's capture. Now we've protect. So this is, well, maybe these are a lot like me. If I go down to my basement right now, it is filled with years of stuff in containers, and I don't even know what I have anymore. So, a lot of organizations have their file servers, and they have a lot of different sources of data. I don't know what they have anymore. And some strategic stuff there. Maybe there's some stuff that would compromise them, or is private data that shouldn't be available to anybody. Maybe duplicates. Maybe there's just plain wrong in there that won't help them. And so organizations need a way to understand what they have, secure, manage it, and make sure the whole enterprise complies with the rules. So that's one of the C's, the compliance piece that Mark brought up, and has tools for this. And yet important, ask Sony Pictures, ask Target, ask Ashley Madison. Actually, don't ask Ashley Madison, or your spouse is going to get upset with you. But what I'm saying here is that there is a real to not protecting your content. Let's look at is certainly workflow, and a lot of people in controllers understand workflow, but it's also integration between all of your systems, your line of business systems, your customer relationship systems, your ERP systems, databases, so forth. So what we see is a lot of companies have these silos. They have 8, 10, 12 different systems, and we'll see a couple examples coming up, and at Union Bank too, where the systems don't work well together. We don't understand what the other's doing, and it's very time-consuming to go through each one. And these silos impact the ability to respond to customers and impact the business. In that, it's the ability that you need, that total picture, and that's what advanced case management can do. And Union has advanced case management, so I want to give you a little side trip on that. Is a, I think, a really interesting way to think about it, the concept of filtered content. So, like Facebook accounts, they understand. You open up an account, you put in, your friends, you put in the company you work for, and the schools you went to, and your favorite books, movies, and music, and provided to you based on those preferences. Well, advanced case management can do that same thing, but in a business context. A case could be a customer, so anything to do with that customer could be available to you. Now, look at a screen this busy. This is saying that it's an environment, and we could have video, you could have images, you could have GPS data, you could have views of social media, you could have analytics running on content in the background, or database access and so forth. So all of this available to you. You'll see the benefit of that very, very soon. So that's part of the activate. Now we've captured, we're protecting, we're activating, and now the next area of IT is analytics. Every analytics these days, big data analytics, you hear about it. Really that exploration of oil, this is the getting value, extracting value out of your oil. And analytics, many different categories of it. There's content analytics that can call across documents and look for patterns and phrases and keywords and help you devise insight out of documents. There's predictive analytics, then social media and a whole bunch of other areas, and say, hey, this customer is about to leave you. They're happy. You might want to act now and make a special offer to retain them. There's investigative analytics. Very powerful stuff that looks for connections between people. And this is the stuff that Osama bin Laden, because of the we can look at entities and connect people. And there's performance analytics, where you can evaluate your team and how everybody's doing. And we see, Sally is got a lot time on our hands and Joe is falling behind. Why don't we balance the load a little bit and make sure Sally gets, some of Joe's work. So we can do analytics in a lot of different ways. And finally, gauge piece, which is a kind of a big concept, but let's bring people, content analytics, and process together in one environment. And let's bring together IT, business, and finance, too. Organizations, those groups do not work together or talk well together or have competing strategic differences. And Engage is all about getting folks to work better together. It's also using cloud technologies for faster, easier capabilities and even mobile capabilities to access to business content anywhere, anytime. So there's a world of ECM in 5 easy pieces. Now let's talk about how you evaluate and determine the value of ECM so that when we get to our Union Bank story, we understand what it is that they did there and what their revelation was. So in order to do that, I want to learn from the experts, and particularly Forrester Research, one of the big 3 analyst firms here in IT, and we have engaged them to do in-depth analyses of several customers. And so, frankly, I'm giving you a methodology that you can borrow and use in your own organization. So I think this is a really good takeaway and a good value. So Forrester says, well, of course, we interviewed more than 800 IT decision makers, and 90% of them say, yes, we need a business case on investment that we make. And IT decision makers, they're IT, but they're also increasingly line of business. They're also finance controllers, CFOs, VPs of finance. So all weighed in and said, yes. But that's the question, well, what do we mean by a business case? So companies will say, well, we're going to add up what we paid and we're going to add up what our savings are, and there we have it. Well, that's total cost of ownership. Start. Forrester will tell you that is a very good start. But return on investment, that requires a little bit more of a sophisticated approach. And so for them, they'll factor in the business impact of the solution. So ability perhaps for users now to be much more efficient, to be more accurate, to understand the customer better, to be fast at getting information and delivering a response to a customer. And that, how does that apply to bottom line? But for step, it says something that we call a total economic impact that factors in risk. An interesting concept and one that you really should consider for a second. Risk is a solution itself not delivering on its promise. What does that mean? Well, the vendor comes in and says it's going to be 9 months and we'll have you up and running with this system. It actually takes 15 months. Well, it's just gone way up. Or perhaps the use case that caused you to purchase the system in the first place has changed. You don't need it, you don't value it as much, or it doesn't have as much of a use. So an uncertainty is sort of some things that can happen from the time you've made the investment to the time you start to use it. And strategic impact is another soft qualities, but one that's worth looking at. So is the solution scalable? Every time you add new users, the thing slows down. Well, regulation, you've got new documents that you have to add into a workflow. Do you bring in a team of expensive programmers to change the system, or can a business analyst change it on the fly? Is it flexible in that way? So these questions to know and ask, and not something that's intuitive right away. And that's why I thought this was a really interesting place to start to kind of give you a frame. Understand. I'm going to give you a couple examples, one in Capture that Forrester did and one in Case, and then to Union Bank. So the TEI is the flexibility on one card. They do the lens of risk, and they end up with this total economic impact. Let's look at it in action. We have a global logistics company, firm that helps, huge move shipments of containers around the world. One of their IT directors told me, he said, in August, I can tell you whether we're going to have a good Christmas or not, because we know what shipped around the world in preparation for Christmas. That's a pretty interesting view of the world. And this example I want to give is like accounts payable capture on steroids, I say, because here's what they have to do. For every container that comes into a port, a customs paperwork. So that customs paperwork is derived from the commercial invoices, which can be pages, thousands of line items, and you pull out 5 to 7 to 10 different elements of data. So the currency, the country of origin, some, the container number, line items, and they're on the invoice, and you've got to extract them. That's a lot like accounts payable. And you put them into the customs paperwork, which has to be available when that container hits the border, hits the port, lands at the airport or the train. So this is a typical turnaround cycle time kind of process. So they put data cap in place. They had faxes coming in. They had emails. They were printing out the emails and the faxes and then scanning them in with the paper. And DataCap was able to make that all into a single input. You don't have to print out faxes and emails. You can turn it into an image immediately. Save money on postage, around time, about 30% productivity boost, meaning they can do the amount with 30% less people. Reduce their lost documents. Whenever people are handling documents, there's a lost quality and there's an error factor. And they improve their cycle time and accuracy, which is good for customers. So Forrest came into and now interviewed the company. In 7 years, they invested $9.4 million. This was a big operation. There's a good-sized number there. And you see the pie chart where all the costs were associated every years. And then they determine what the benefits are. And mostly it's efficiency gains, but also almost 10% in just getting rid of postage and printing costs from streamlining. These nice little bar charts here where you see the first year or two is the investment, the preparation, and the implementation, and then they start to see the benefits. And they have a value of $3.6 million. Determined this would pay for itself in 24 months and an ROI of 39%. So this is one example, pretty interesting example. And it goes on, this it continues to go up. They just 3 years as a standard measurement. And so at $11.9 million in cost savings and from the productivity and $1.1 million in the postage, subtract from the costs, and then some of these soft benefits, and yourself a TEI. So and Union Bank about them. So the example is for case management. A whole another approach, and very interesting. This is pretty fresh. This is a new one that we've received. Financial services company that has about 5 million customers in a lot of different professional fields, and what they want to do is improve their customer experience. And their problem, as this large firm, they're dealing with about 6,000 or 7,000 cases every day, and a case is a customer touch point. And so comes up and says, I want to open this account, I want to move some money over here, I want to do this, I want to do that. Or a brand new customer, the onboarding, that could take 3 to 4 hours. So you've got why is that such a time-intensive process? Well, each case has data in multiple systems that you have to go get. The process they were doing before was very manual, and it took, 10 different systems. You've got to go get the data, you've got to verify that it's accurate, the customer gets data, you've got to check it. It's a very slow process. So it wasn't good, their capacity wasn't good, and again, when you're handling documents, handling content, your accuracy, your errors go up. And they really understanding of their own customers. benefit here in just a second. So we want a system that brings us some out-of-the-box flexibility, that can give us that filtered view of content, that process management in it, some workflow, and case management features, which are more ad hoc and more, oriented around content and how content changes your business process on the fly, and gives a lot more flexibility. And wanted to help us in two ways: auto collection of data, so we can make a determination, help a customer across the threshold they're trying to cross, and reduce all of this effort and these errors we're making. And the other one was a 360-degree view of each customer. They had little siloed views. They had fragmented views, not a complete picture. They IBM for case manager. So again, Forrester came in, they did the interview, and a couple of things popped out. Once this was up and running, the workflow components, along with some of the case management flexible tools, allowed them to get from 10 systems and 3 gathering data down to 3 minutes, and was retrieved by the case. The case will get all relevant content related to this customer and bring it in. Now, searching anymore, and the bench is no search at all, as we saw earlier. They got, and Forrester tried to, put tricks to it. Instead of 1 hour or up to 3 hours, all of their transactions are taking 3 minutes. They got conservative. They said, okay, well, just because you're going to get these huge productivity benefits doesn't mean human beings are going to take advantage of them. Maybe that day because they got their work done. Maybe they sign on and check their Facebook account. Maybe they, work overtime to get their work done. So they said, we're going to apply a 30% conversion rate and not just assume that it's going to be rosy. But high volumes of cases, previous case processing time is, dramatically reduced. You can't get that away. So they really put together a 3-year view here, and 150 new cases each year, new customers, and a case volume, 5,000 or so, 5,000 or 6,000. So from 1 hour to 3 hours down to 3 minutes. Apply rate, apply the hourly wage of the knowledge workers, and here you've got a interesting view of a benefit just from the productivity of knowledge workers getting more done. This is worth looking at, worth understanding. Is the 360-degree view of the customer allowed them to be better at engaging and offering the right product at the right time. And the example that they gave is they were doing case. You could set it up so that all social media of the customer is also visible. Analytics on that, actually, if customers put of their new grandbaby and said, look who just joined the family, I'm a proud grandpa, that is for someone in this company to think about a college retirement fund, wouldn't you think? Or, you get the example here, without a lot of these types of services are they're likely to be adopted if made at the right time. If you call a 25-year-old and say college savings retirement fund, they'll probably swear at you and say, I'm still paying off my own college. But to understand these life events, which is unable to do, you're able to make a better decision. Review of this financial services company in the first year and so forth. The chart, we see present value and present. They discount money by 10% every year because $10,000 was worth much, and it's not worth quite as much today. So they did investments and some but pretty astounding story here. A present $13 million, or ROI of 238%. And they determined that the system had paid itself back within a month. So these are powerful, powerful solutions from just simply looking at a business value point of view. And here's a graphic for you. So to understand the customer, they determined that they're able to make $25 to $50 million more sales or retain funds and reduce churn because the customer better. Determined that the customer was getting unhappy and make an offer to kind of smooth over whatever pains were being caused. I mean, it's 7 minutes saved, and I think the real key thing here is 10 systems that knowledge workers do not have to log in. Is the case. The goal here of our Union Bank story is to give some understanding of what ECM is today. It's a pretty sophisticated set of tools and best practices. How customers can understand their value, measure them, and report to the organization, hey, this is what we're doing, and this is why we did it. So we have another poll question, and I'll ask Mark Brousseau to come back and roll and hear about Union Bank.
Good. Poll question, which is about to be displayed on your screen. What ECM solutions has your organization deployed? Payable capture, account payable workflow, centralized capture, distributed or branch capture, process management, advanced case management, above, or you just aren't sure. Click all reply to respond to the poll question now displayed on your screen, and we're going to discuss the results in just a moment. So, David, there's undoubtedly someone on the line right now who has been wowed by the business cases you just described, but it's probably where do I start? And here we are illustrating some of the many pieces that folks can use. Where does an organization start to try and begin this process of optimization?
Well, it has a department called the Business Value Assessment Department. They'll bring a team in and help you understand where you're spending money, and they'll do it's high level, but it's a pretty interesting walkthrough. There's that, and I'm sure that Stuart Bruce and Pyramid Solutions has their own approach, because it starts with a dialogue, a discussion that you start having about, well, what is it you want to accomplish? What are you trying to do? What is a good business outcome? And let's see the steps that we can take to get you there. Everybody's different. Everybody's in a different area of adoption. We may see people have a lot of accounts payable capture, but they're not doing any distributed capture, and we want to start thinking about that when this poll is done. So it's a journey you get on, and there's sort of a maturity model. And the thing is to determine where are you, and then go next.
David and I speak about the challenges organizations are having in managing their content. What's the number one thing you're hearing from end users in terms of where they're struggling in particular?
Probably the biggest place that we're finding people are struggling is what you talked about, is where to start, but how it fits in with all the regulatory compliance that they're responsible for. So gone are the days that we can just put things out on file shares or use email as a workflow capability. Now regulatory concerns had to be taken into effect for it to finish. So being able to put it in certified repositories such as IBM, being able to structured workflow as well as your unstructured workflow, and capture all that information in analytics so you can report on it to whatever regulatory bodies are, is for a lot of our clients moving forward.
I heard David talk about the journey starts with a conversation. What's the number one tip you'd give to the attendees on the line who might be interested in starting out? What's the one biggest lesson learned from your vast experience that organizations should consider applying if they think to something for them?
The benefit that we would have is the group within your organization will actually get a business benefit. So a lot of IT organizations and a lot of programs are looking to putting these types of systems, want them in there. Real benefits come with the organization is when you've got a delighted customer at the end, whether it's your end customer, in our case, if it's the branch banking or the operations people or loan origination side. For reference, quick is to start moving this across your enterprise, getting more ROI as the subsequent projects go on.
David, we asked our attendees which ECM solutions has their organization deployed. About half of the folks on the line today have already deployed an accounts payable workflow. 1/3 of the attendees have deployed accounts payable capture solution. 18% of our attendees have centralized capture. 9% have done nothing of the above. David, do these results surprise you?
Oh, no, not at all. I guess I'm a little surprised that business process management came out low, although accounts payable workflow, we kind of cheated, is business process management. So if you put them together, but you know where they have, so there's so many other areas, especially in that customer engagement piece. And we have folks, you know, from all different industries. Everybody has a customer. You know, even if you're a government agency, your customer is your citizens. So, you know, that's an area where case and you know, even BPM in some simple instances can provide value. So I guess I'm a little disappointed that we haven't seen more adoption there. I should be excited that the upside is that there's room for growth.
Spoken like a vendor. So Stuart, to David's point, what are these folks missing? What are the benefits that the attendees on the line who haven't deployed BPM or case management, what are they missing out on in your mind?
What they're on from an advantage to their end customers is process efficiency and the return on investment, so you can invest back into those processes as well. So being able to do better work for your customers. A lot of our clients look at what they do as a commodity piece of work, whether it's selling somebody a loan, opening a bank account. It's somebody on the street does it exactly the same way. So why keep business with this individual client? And business process and advanced case management provide less expensive service and better service to those end clients, and or add new clients to your client base.
And with hand it off to you, Stuart. Tell about Union Bank.
Thank you very much. Union Bank is about a $113 billion bank, on the page, and they're based on the West Coast, but they're a Japanese-owned bank. Why? They deal with both from a governance perspective and a return on investment perspective, not with that U.S. organization, but with a multinational firm, which is one of the largest banks in the world. 400 branches, it puts them about 20th, 19th largest in the country, but the corporate goal within the U.S. to be a top 10 bank. Now, projects they do, and ECM being one of them from a program perspective, is geared around that large goal. So their focus has been a lot of customer service. Like I said, also getting my knowledge worker efficiency. Not only provide better customer service, I can provide it faster and less expensive. One of what we've put in was a full change of address, which is simple. I go into the bank and I'm moving at the end of the month, so I want to make sure all my accounts are up to date. That process, even though it's simple, you get days before we worked with them and transferred back and forth. And even worse than the taking days, it wasn't always 100% accurate. So pieces from a customer service perspective is I really want to make sure I'm not sending statements to my old address, because a compliance issue and a regulatory issue and a great way to lose a client. So being able to move it from an ROI perspective into a much shorter process, being able to do better customer service is key pieces to their growth. David talked about capture and a little bit about a real-world example. From a bank perspective, David's example of having the different colored bags to drive their workflow is a very accurate place that we've seen in all of our banks and the branches. This one had an interesting, compelling reason. As anybody in the banking industry knows, with the Check 21 process, and anybody else that's now doing mobile deposit with their checks, the checks have become less important from a shipping around perspective, but important from a monetary instrument. As their branches and the Check 21 process was rolling out, they no longer had to send the couriers around to the branches. So to them, a whole bunch of other documents and processes running in those bags that got a free ride because the checks, being a very important piece, were running through. With the checks being stopped at the branches, no longer shipped, all the other process through all the other lines of business had to look at how I replaced that. What the banks did is they took a look at what the shipping was going to be, and what it was starting to be is that the check courier stopped, and we're going to have to replace this all with branch scanning. So with 18 months of implementations, 70% ROI, and this is all 100% hard dollar ROI. So it's shipping, copying, and printing. Really step into branch automation, and really help fund a lot of the other pieces. So from a hard dollar ROI, but then actually start to improve your process and improve your customer experience. So one of the examples we started putting in, where we validated at the branch with the clients or at the call centers, and it just became part of the overall piece. Once those documents are imaged or start electronically, the real power of workflow is to be able to use that information for something valuable. Some of those branch processes coming through, they used to take days, used to involve all the shipping, used to involve multiple touches with the clients. We started removing all those touches because we got a complete touch done at the beginning. We transformed all those documents from simple archive that I'd look back at in the future and actually made them valuable business collateral. And taking a handful of those key processes, we reduced 15 full-time employees to about half. That meant a $500,000 net savings in the first year. Is like many of the banks we deal with, is they shorten the ROI period to 12 months. So projects that we work on are less than 12-month ROIs to do the cost justification. And we do the same sort of service. We've been building out all those ROIs right at the beginning. They are measured at the end of the process now. Where our used to get away with going to reallocate employees, now putting people's names on them and saying these are the people we're going to reallocate, and the teams are coming back at the end of the project and that they've actually done that work. Start to expand this out. As anybody knows, the first system sometimes costs a little bit more because there's some infrastructure, there's some setup, there's some retraining that goes on. As we've started to roll out with Union Bank across their enterprise, we've put it into what we call a program. This is still going through that rigorous cost-benefit analysis, and the only ones that get funded are regulatory and compliance, because the government says they have to do them, and the ones that actually have that solid business plan before it goes through. And they're actually measuring these as well. Be that they just had to put the business plan together, nobody held them accountable. Now they're held accountable at all phases of the project. So give employee onboarding. Sales process, problem that when an employee was hired, and it took up to 30 days for them to have everything they needed to be productive. So they may not have had access to the building, they had to call people. They had all the programs they needed to perform their job on their computer. Their HR documents weren't all signed. And we went an 8-week process, and we did that from 30 days to 15 days. candidate system, but we're able to orchestrate that process a little bit better for the hiring managers that don't hire that many people per year. But when I look at a large organization, you've got 2,000 to 3,000 new hires a year, that starts to add up and has a very solid ROI, as well as you've got better employee satisfaction. Another just recently went live with it. The business case was a 28 full-time equivalent reduction. That one was actually shrunk down to a 9-month ROI. So even the bank is getting more and more aggressive on which projects they do. This was the number 2 priority in the bank. So they're able to put a lot of people onto it. But as everybody on this call knows, the more people you put onto it, the cost goes up. So I've got to increase the return as well. So we get them down to anywhere from 6 to 12-month return on investment, even on very large projects. Program across the different organizations we're working on, anywhere from a 20 to 30% efficiency gain. And this is working with those differently to say whether that gets reallocated to different revenue-generating activities, or they actually reduce headcount and reduce their costs on each side. One of the people within Union Bank that's been rolling this out, who's head of the ECM settlements, starting over the last couple of years, and as they roll out these solutions, these enterprise class environments, each project is getting cheaper and cheaper as they go forward. So there's a 40% reduction in time delivering the second solution of a similar size with management technologies. So an example where my investment starts to go down. So as investment goes down, my repeatability goes up. Then my ROI calculation becomes that much easier to justify because I only have to worry about the one side of the equation. Out on our website for the Union Bank case study that goes into more detail. Just wanted to give you a brief highlight of it. But over the last couple of years, we've been able to shorten those projects and those programs significantly with the newer technology. One of the first projects we did with them, this is a quote from one of the operations managers, the fastest turnaround in banking history on any projects they had done. So we get things done quickly, efficiently, with extra time and effort, that's getting those pieces justified as we go forward. That'll turn it back over to Mark.
David, you had a couple of closing comments before we go to our poll question and our questions.
Yeah, see, I'm just loving that Stuart was here. He's on the front lines. He's these software platforms and solutions we talked about with Capture, with case management, and he's done. We were just talking about where do you start. He's on that journey with Union Bank and kind of came back and gave us the report from the front lines, which I think is exciting. And what they're doing, what anybody should be doing, is trying to think about, okay, when my organization does business content live and processes that are dependent on business content, about HR and accounts payable and perhaps contracts management. That is stuff that's, across the board we all have to deal with. What I'm hoping that I did manage to point that content is invisible. We are doing a little bit better of a job with getting paper under control, and yet up pops video, up pops social media, up pops all these other new forms of content that also need to be accommodated, managed, protected, analyzed, and we can use for engagement. So I think the idea here in terms of what to do next is start to look in those areas in your organization where there is a lot of content, business content, and processes around them, and say, what's being done here? Is there an annual going on? You can assume there's going to be a lot of errors and not good customer engagement. And start to look at putting some of these solutions into the of going forward and becoming a more agile and more customer, type of organization, no matter what industry you're in. That's open to start, is that kind of thinking. And let controllers and CFOs and VPs of finance and other folks who think about the three, let them actually begin to influence some change in an interesting direction.
Poll question, which is about to be displayed on your screen. Which of the following are criteria that your organization would use to evaluate an ECM solution? Check all that apply. IT costs, IT cost savings, user efficiency, business effectiveness, risk mitigation, risk versus reward, scalability, and free. Check all that apply as being drivers in evaluation of ECM solutions. Dave, we have a question from an attendee. They were undoubtedly looking at our poll question from before about the different types of ECM technologies, and they wanted to know if a proper first technology that they should deploy. Is there an order of events in terms of the technologies, David?
That's a simple question. A lot of people might say, well, you can't do anything until you start to capture. But a lot of people might say, well, you can protect everything you already have. So I think capture or protect would certainly be one of those areas to start with. And capture is an industry. It's a pretty big industry. IBM engaged data technologies, which has a lot of interesting bells and whistles and features in it. So a quantity called Stored IQ, which crawls all of your file servers, it comes back and tells you, what you have. These are the kind of two entry-level capabilities that folks are coming to IBM for. There's like I mentioned with the 5 pillars, you could start anywhere, you could do all 5. It's really up to the organization and your own business goals. But I think that until you're capturing or until you understand what you have, you're not going to be able to move very quickly.
Stuart, another attendee wants to know about the benefits of distributed versus centralized capture. Here again, I assume they were looking at our poll question. Is it an either-or discussion, David, or are there benefits to deploying both in an organization?
Yeah, look at the couriers. The courier in the Union Bank example is a perfect story.
Mm-hmm.
You moving documents around. There is a lot of value in capturing at the point of origination, they call it, or the point where a document enters the organization or is first created. If you're moving documents around, they can get lost. There's a time delay while shipment happens. There's the cost of overnighting or of card services or of mail itself. $40 for a pound of documents. Documents can be heavy. So if you're moving documents while utilizing that multifunction device that most departments already have, that's a capture device. And software that you can apply that and begin to capture, and you can encrypt and upload into your repository right from there. And the benefit is no more moving of paper.
How about the same question to you? Is there a way to tell if a distributed versus centralized capture approach is best for someone's organization?
Generally speaking, if the points of entry are out in remote locations, then a distributed model as part of your capture is important. But it doesn't have to be one or another, as you did mention. You may want to do the indexing or the automatic indexing at a central site. So you've got some economies of scale, you've the ability to have quality assurance, not burdening your remote employees, whether they're in a branch or an end client, with doing your indexing for you. So what we're finding more often than not is having a hybrid model that is a combination of both, depending on what the specific use cases are.
Cindy writes in, these are impressive business cases, so tell me, why don't organizations make their ROI. So where do folks go off rails, Stuart? What mistake do they make that causes them not to make their business case, and what should folks in the audience not do, apparently?
So the number one reason we've seen that people do not hit their ROI is they don't follow their plan. So when we build the business case out and have the high-level requirements and we're automate process number one, they go through the end client, the business says, well, I'd also like to do this, I'd also like to do that, and that's in the original business case. So not necessarily a return on it. The investment tends to go up, and then the return doesn't come in because they also don't want to let those FTEs go and still account for those. I find is the number one reason that the ROIs don't work. It's a not sticking to the plan as you go through it.
Mistake IBM sees in business cases and ROI. Yeah.
So what Stuart is saying, I mean, project management is an underrated feature here. And I think a great example from Union Bank is they establish up front what they want to get out of it and hold everyone accountable all the way through. And that's really important. I just think really thorough, good project management is a key part of this.
Following are important criteria that your organization would use in evaluating ECM technologies. 61% of our attendees said IT costs and IT cost savings. 68% said user efficiency. 65% said business effectiveness. So I'm seeing cost, efficiency, effectiveness. Stuart, does this jive with what you hear from organizations when they call you in?
Yes, and what we're finding is the IT costs are shifting down the list a little bit, and that tends to be the very traditional model. We're finding the business efficiency is moving much further up.
See this going, David? Why now? There's people on the line who've heard this, and they're probably intrigued, but why now do they need to look at business content? Is there something coming down the tracks that's going to make this problem even worse?
We're at a very interesting tipping point, and we have the capabilities to bring in analytics, which is a huge dimension that it can add. We have best practices well proven over time. We have capabilities that are in very scalable implementations around the world. The stuff is proven, and at times it was large banks, large insurance companies, large government agencies that did the initial work. Now everybody can benefit from them. So this sense of, this stuff works, it's proven, and let's put it to work. Otherwise, you're missing out on a great opportunity.
Word. Stuart, David, thank you so much for a great presentation. With that, I'm going to hand it back to Shelley. Shelley?
Thank you much, Mark. Thank you, David and Stuart and Mark, for a great presentation today. At the time we have for today's program, if you weren't able to ask your question or you have any more questions, please email them to webinars@iosm.com. Please fill out the evaluation form that will appear once you close out of the webinar so we can better serve your needs in future webinars. I want to thank speakers again and all of our participants in today's webinar. This is brought to you by the Controllers Network and sponsored by IBM. Thanks, everyone.